Hello guys, welcome to this video, and in this video I will basically be teaching you guys the concepts that are being discussed inside of this PDF so that everything ultimately makes sense, right? So I know that some of you are seeing the charts that are being posted in the group, and you may not understand what any of that is about, and that is the purpose of this video. So before we begin, I would like you guys to please read the Forex disclaimer, as everything covered in this PDF and in this video is not a guarantee, and trading carries risk, and you should acknowledge that risk. You are responsible for your own trading, and that is that. So let's get to the video. This is the contents that are going to be covered today. Today we're only going to be covering 3 stock indices and stop hunts in today's video. So let's not waste any time and let's get to the video. So over here we talk about 3 stock indices, which are S&P 500, which some of you may know as SP 500 or US 500, then NASDAQ 100, which some of you know as NAS 100, US 100, and then Dow Jones, which some of you may know as US 30 or USA 30, whichever broker you're using. It really depends on the broker that you're using, right? So these 3 assets together, we call them the index triad, or the US index triad, right? So we monitor each of these assets and we use them in our analysis, but that is going to come later in the PDF. But for now, all you need to know about them is that most of the time they all 3 move in the same direction, and that helps us to be able to do our analysis, right? So the first thing that we are going to be discussing in this PDF is that we are going to be discussing stop hunts. Now, what exactly is a stop hunt, right? A stop hunt is when you are in a trade and you place your stop loss above a specific level, and price reaches for that level, takes you out of the trade, but then it then reverses back into your direction. In other words, you place your stop loss believing that if the market is to get to that specific level, you are wrong on the trade. However, you're not wrong on the trade. Why? Because the market eventually reverses in your anticipated direction. So that situation usually is very frustrating for most traders. And what is the solution to something like this? The solution is simply to identify the stop hunt and to trade in line with it. We never just enter the market, we wait for the stop hunt to take place. Okay, so let's explain this in greater detail. So as you can see over here, we have a depiction of a trade, and our interest is not in every trading strategy that is out there. We don't care what other people are trading, but we do know that there are many strategies out there, and people buy and sell based on a number of reasons. So over here, we can see that a high is formed, right? And price starts trading down. So we're going to say that a trader over here saw that the market was going to sell, or they believed that the market would sell at the specific time, and they sold the market, right? And then they placed their stop loss above a high. Okay, that is important. They placed their stop loss above a high. Now, there is another party in trading which we call smart money, or the market makers, the large institutions. They have a large amount of capital in trading, and they cannot just enter their orders. Let me explain this so that you understand. In trading, right, when I'm buying the market, I'm not just buying randomly. someone on the other side is selling to me. Does that make sense? Or when I'm selling the market, that means I am buying from someone else. Now, because I don't have that much capital, it's very easy for me to buy and sell because there's always available buyers and sellers to be the counterparty to my trade. But the smart money, the large institutions, the amount of capital that they have is so much that they cannot simply just enter into the market, as they may not be an available seller that is available if they would like to buy, or an available person to buy from them if they would like to sell. In this case, which is a sell scenario, if the market maker wants to sell, they can't just sell because they may not be available buyers to buy from them as they sell. So what happens is that the market will reach to levels where liquidity is available. What is liquidity? Liquidity is resting orders that are in the market, right? So if I'm selling and I place my stop loss, because this is a sell scenario, this is going to be a buy stop. In other words, my stop loss is a buy stop order. What does that mean? It means that I'm telling the market, or I'm telling my broker, that if price is to prove me wrong and go against me, I want to place an order to buy back my position and get out of the sell position that I was in. I hope that makes sense. Rewind the video if you don't understand and listen carefully to what I said, right? So the market makers know that there are buy orders resting above here. Some traders, they may not have their stop loss above this level, but what they do have is they believe that if price is to trade above this high, the market will break out to the upside. They are breakout traders, or I like to call them breakout artists, right? So they place their buy orders above there, saying that the market will break out, and the market makers are aware that all these buy orders are resting above here. In other words, they have someone who is willing to buy from them because they want to sell the market. So the market, what it does is that it drives to that level, allowing the market makers to sell, and then the market will then reverse, because the market is not working for the average trader. It is only working for the smart money. And this is how they are able to attack the retail traders. This is why we do not want to trade like a retail trader. We always want to be trading on the side of the smart money. Does that make sense? So the market trades up, takes them out of the trade if you were selling, or if you were a breakout trader, it will trigger your order, allowing the market makers to sell to you, and then the market then reverses in their direction. How do we take part in this? The way we take part in this is by identifying it and trading alongside the smart money, alongside the market makers when we see that the stop hunt is taking place. Now, in future videos, we are going to teach you how we know that price reverses from here, and how we know that price is not going to trade here and continue trading higher. Because we have instances where the market trades higher above a high and does not reverse but continues trading higher. We will discuss that in future videos. But what you need to know is that we need to avoid a stop hunt and to trade in line with it. This is a bullish example, right? Where a trader wanted to buy this market. The market was trading up initially and formed a swing low. Now, below a swing low, for a person who is buying, is sell side liquidity. Sell side liquidity. Because if you are buying and you place a stop loss below this low, what you're basically telling your broker is that if I'm wrong and the price trades below that low, I would like to sell my position and get out of my trade. On the other side, a trader who is trading a breakout strategy would say that if price trades below this low, this is a breakout and price will continue to trade lower. The smart money or the market makers are aware of this fact. So what they do is that they allow the market to get to these levels, which will allow them to buy from you who is selling at this level, selling out of your position or selling for a breakout. These are strategies that we don't want to use, but we want to trade in line with the market makers, right? So we wait for this to happen. Once we see our entry pattern inside of here, we know that it is a confirmed stop hunt and price will reverse from this level. So that will be all that we are going to discuss in today's video, right? Rewatch the video if you don't quite understand this, but this is the most simplest parts of the video. So it is something that is basic. It is something that each and every one of you will be able to understand, and we will discuss further things in future videos, right? So I hope that this makes sense to you, and this is going to be the part 1, the first episode of the continuing series of videos that is going to discuss all the concepts that are discussed in this PDF. Thank you very much. Have a lovely day.